a confession. I'm not a banker, never been one. So if my out-of-the-box suggestions today sound out of this world to you, my apologies. I am, however, as a consolation, a son of a banker. And if you can indulge me with my father's story, I promise you it's related to the message I want to deliver today. My father joined a British colonial bank the year I was born, and his title was business advisor. In today's context, it would have been both a relationship manager as well as a credit officer to the branch manager. That role was new when he joined the bank because our central bank has just outlawed compradors. And if you have been around long enough, you would know that the British banks work on the system of agents, where some local individuals would post collateral, liquid collateral, for all the customers that are indigenous to the bank to guarantee their loans. And of course, they make a cut from the interest. Of course, they guarantee all the losses. Many compradors have become very wealthy. They make a cut from the bank and possibly make a cut from the customer as well, which is why it was outlawed. And my father had always said that he wanted, he wished he was able to be a comprador. Little did he know 40 years later, his son would be presenting to the Prime Minister of Malaysia to set up a modern-day institutionalized comprador known as Dana Jamin, which is a national guarantee company for Malaysia. So it's somewhat come full circle. And we'll talk about guarantees later and its role. Let me put that aside because I'm not here to just talk about stories. I'm here to talk about the question of why should Pakistan bankers talk about climate adaptation finance. Okay? But before then, I want to share with you my journey in understanding adaptation. Adaptation to me, up to 18 months ago, was the calamities that we read about, the 2022 floods, once in a decade, once in a century, and the actions that follow often are limited to preparing ourselves for the next big one. You look at your insurance policies and you say it's not enough, we raise it, we cover certain perils. That is a threat that really comes to my mind when we think about adaptation, and I believe that is this case. But 18 months ago, I was in a conference room similar to this in Manila, and I listened to the mayor of a province called Occidental Negros. Incidentally, Occidental Negros produces 60% of sugar for the whole of Philippines, 60. And he made a plea, of course, with the research and analysis funded by the UK government and BCG. He said that if rain were to be delayed for 4 weeks, the vulnerability of production could be up to 30 or 40%. Not 1/12. So 1 month of delay of rain could wipe out production by 30 to 40%. Because it is the harvesting window in the sugarcane business. You could have stunted canes, shorter canes. Best case scenario. Worst case, you have total crop failure. Okay? And that hit me quite profoundly in terms of my enlightenment about adaptation needs. Because it is not the headlines that we read when the big one, whether it's flood or drought, occurs. It is the subtle ones. A delay of rain a little bit, rising temperatures that affect harvesting and planting windows that really is the biggest threat to us. I think we've heard before how agriculture is important. It is even more important now that these subtle changes to the climate is really going to affect Pakistan as a whole. Right? So in that case, they were looking at a nursery to produce more drought-resistant sugarcane. Right? So there are solutions that can be introduced, needed to be financed, but before then is the kind of analysis, study, and knowing the geography to be able to come up with the case for adaptation investments. Now, let me now move to some statistics, because I realize in Pakistan, no presentation will be complete without numbers. So with Ali's help from PBA, the National Adaptation Plan calls for a need for $19 billion for Pakistan. A year, by the way. And then the report to the UNFCCC, I think the spending for adaptation is $1 billion a year. We've seen enough statistics that are not so encouraging, so I won't go to more. But to me, the more important statistics, which is a call to all the CEOs here, is what percentage of your loan book is now funding adaptation. If you don't know that figure, I'm sure you will ask that tomorrow when you go back to your offices. That figure, whether it's 2%, 3% of your loan book, is a starting point. Because next year, hopefully, it's 3%. It's 1% more than this year. And my aspiration, if I deliver my message well today, maybe next year Zafar will be including in his statistics of his opening remarks the percentage of your loan books that are dedicated to adaptation. Because the reality is this: you can say that I'm immune to such calamities because I don't lend to farmers. But if you finance a refinery or a mill that is dependent on farmers' outputs, 30% drop in production in your locality where you source feedstock from would impact your mill. So the message I want to deliver is this: these subtle, they call it extreme weather changes. These are not extreme weather changes because they don't hit the headlines. The farmers can tell you, but you only hear it from them. You don't hear it anywhere else. No loan book is immune. And if we extend this argument, we're talking now about food security of a country, whether it's wheat, sugar, and all the other things that you consume as a nation. And when you extend food security, we said, fine, we can export from the neighboring country. Then you talk about a balance of payment and the current account issue that now will start affecting, and of course, inflation, right? Affecting the rest of the country. So my message to you is simple: no loan book can be immune to the subtle changes of climate change, right? Let me now spend a minute or so to explain why adaptation projects are so difficult for a banker like yourselves. I'm not a banker, but I'm a practitioner. I read credit papers. The focus of lending is usually to a company or a borrower. And you isolate everything, and you can have 100 pages of credit papers focusing on that. But a lot of times, lending to climate projects is beyond that of a particular borrower. It is usually to a community or an industry, and the solutions need to come collectively. So a change in mindset for adaptation projects is required, right? So the focus now would be less on the company and more of the sector or subsector or the value chain, okay? That's number. Number two, adaptation projects often do not generate revenues. That is the most difficult part. To pay back for the investments, you have to create some sort of revenue, whether it's a cess or sub-tax or local taxes of some sort. So it's a very difficult thing to justify to our traditional banking minds, right? But it is needed. It is needed, and we have to change the perspective for that. Secondly, it's localized. Something for a particular state may be different for another state. So perhaps going back to the days of branch banking may help, as opposed to the head office in Karachi looking at adaptation across Pakistan. Right? So there are many challenges with adaptation projects, and it really calls for a really change of mindsets. Right? So what are we to do if Pakistan bankers are to act on adaptation projects? We heard a lot about macro perspectives from the two doctors that preceded me. Let me share perhaps some micro steps that can be taken. So number one, track your loan book, right? Number two, when your credit officers write papers about your top 10 customers of your customers or top 10 suppliers of your customers, usually we do that for diversification, right? The question now is, what if the whole top 10 buys 30% less from you, or is able to supply 30% less, given the vulnerabilities of climate change? So the conversation needs to go beyond the credit of a company. The credit of the company is now related to a variety of factors and the supply chain that will impact their ability to pay back your loans, right? So I would recommend a 360 approach in this. Number one, look at the value chain up and down. Look at your suppliers. Look at your customers for one, but look at their suppliers, their buyers. Let's not just tick the box on the top 10 customers and top 10 suppliers and move on. Ask of their vulnerability. Secondly, in the 360 approach, you look to the sides. And here you look to your customers' competitors, look to their neighbors, because if, say, you're heavily dependent on labor, if the community disappears because no one can plant anything in that area anymore, even your labor disappears. So there needs to be really a wider view on your customers' resilience, or the other way around, vulnerability. Right? And of course, we look to, I understand there's no shortage of trade associations in Pakistan. Not to talk about PBA, but there are smaller ones. I think the focus there should be for them to look at the vulnerability of their members. Right? They can collectively look at what can be done. The first step is really to study the vulnerability. What will be the impact if rains come 1 month later? Because when you study that, then the urgency to act gets more pronounced, right? If you're looking at a 50% vulnerability, then you would act. If you're talking about only 10% drop, then you have less propensity to actually put actions to motion, right? So that would be a good starting point. And then, of course, follow the money, right? Lenders, bankers need to start having these conversations. I want to end, and coming back to my father. He had to change his bank's loan books, one that was fully secured by Comprador's liquid collateral, to one that took direct exposure to the community in Penang, which is a former British colonial port. I remember following him to visit a fisherman and his 5 sons and the 5 trawler boats that the bank financed. In his case, there was no choice but to change the loan book. And I was thinking that I was going to say, in this case, for adaptation finance, you have a choice. But listening to myself over the last few minutes, actually, you also don't have a choice if you are to protect your loan book, if you are to be concerned of food security, and if you have to be concerned of the macroeconomic health of this country. Dr. Ali Sima, Dr. Salman covered those, right? Essentially, you really maybe have time, a little bit of time, but you really have no choice. So I hope the story of my father can inspire you all to go back and look at your books and start making the changes that are required. Because, coming back to the question, why should Pakistan bankers act on climate financing? It's simple. If not you, then who? I want to thank my host, Zafar Munir, PBA, for the opportunity to address you today. Happy to take questions later at the panel, or if I don't get to your questions, please come up. Particularly to the young, I see a lot of young people around. Feel free to reach out. Happy to answer your questions as well. So with that, I thank you all very much.